Hello, this is Allie Swafford with Prosperity Partners Wealth Management. I'm going to talk about a subject that's on all of our minds, the Russia-Ukraine crisis, and of course, investing. Typically, the best course of action during periods of market uncertainty is to stay invested for the long term. Don't attempt to try and time the market. I know long-term investors have noticed that this uncertainty is nothing new. We can go back to the emotions you felt February of 2020 when the news about the coronavirus broke and the global stock market crashed 34%. But if you stayed, for a calendar year, your return would have been 16.25%. We can go back to December of 2018 when news about the intensifying trade war between the US and China broke and global stock markets crashed more than 12%. But again, had you stayed, you would have been rewarded in 2019 with a return of 26.6%. We can even go back to June 26th when news broke about Brexit, sending global equities into a sharp decline, wiping out more than $3 trillion of market value. However, investors who stayed in the market would have made a 5% profit relative to the pre-Brexit level just 3 months after the referendum. We could go on and on with examples from flash crashes and geopolitical events to outright financial disasters such as that of the financial crisis of 2008. But what is the lesson that we learn from all of these events? First, markets are always volatile in response to geopolitical events between significant folks around the world. Now, Russia accounts for about 10% of the world oil exports. So any disruptions could impact the price of oil, as we've already seen. Just the threat of this disruption has influenced the markets. The market's reaction is typically swift, and then it bounces back. One of the things that you all need to know is adequately diversification in your investment portfolio will protect you from the unknown. We have a lot of data to support the recommendations that we make for you, and you might even want to consider buying into some beaten up stocks or sectors. Some of the advice that we would look at is, what about doing a Roth conversion at this particular time? Or again, what about tax loss trading and rebalancing, buying some of the beat up shares? We can implement these types of strategies for you, but of course we want to make sure that your portfolio still has your risk tolerance at the core of how that diversified portfolio is set up. So there are some things that we can do if you're feeling particularly uncomfortable. But I would say that getting out of the market is not the best direction to go. Let's look at inflation and the fact that cash today, we're at a 40-year high in terms of inflation, and so the purchasing power of cash goes down relative to real return. The second thing is it's impossible to time the market. Unless funds are needed in the short term, going to cash introduces significant market timing risk as the investor, you, attempt to both exit a position and then re-enter at exactly the right time. Two decisions, both very hard to make, very hard to take advantage of. So what do we encourage that you do? You know, don't watch the market every day. If you watch the S&P 500 on a daily basis, it's positive 53% of the time, but that means 47% of the time it is not. If you looked at the S&P on an annual basis, the S&P is positive 75% of the time, which tells us your chances of disappointment are only 25%. But that's not true if you watch from day in and day out all the headlines. The day-to-day market volatility drives emotional decisions that hurt average investors more than they help. So what we need to focus on, as we always say, is the long term. There are going to be bear markets and market crashes, but we always go back to history and the benefit of the good years we have to remain in during the bad years. It isn't fun to see our accounts go down, but you must remember it's temporary. The uncertainty in today's world requires that you communicate with us. Please reach out to us. You know, we have put plans in place so that you can get through these tough times. In the meantime, let's take a moment to reflect on all the innocent people who are in harm's way due to the events that are unfolding and remind ourselves how fortunate we are. If we at Prosperity Partners can be of any help to you, whether it's just to get you down off of that ledge or to remind you of how well diversified your portfolio may be, or to reevaluate your risks, don't hesitate to call. But remember, we're long-term investors. Hang in there. This is Allie. Take care.